A bit. For the time being, I think we have Parag Thakkar who joins us, Senior Fund Manager at Fort Capital on the show. Hi Parag, good morning, good to see you in. You track a couple of banking names that we're going to be in focus today. RBL Bank at around 300 rupees. Earlier they were sitting on the fence, not confirming or denying that there is a transaction in the works. Now they're saying there is a fundraising in the works. At 300 rupees, what's your view?
So basically, the trailing book value is 257. We already have it in our portfolio and we plan to keep it because we feel that the tremendous attraction from global investors for our financial companies, which is very normal to expect because we are a highest growth country and financials offer a leverage proxy to the growth of the country. So I would say that it's a great development, huge money coming into the bank that will capitalize the bank for many, many years. And then, of course, it will start a new trajectory altogether.
So does that mean, does that mean that other banks also benefit? If yes, then which would be on your radar because of this? Because now that RBL Bank has done it, obviously the gate's open for others too.
No, so basically, I'm not sure. See, first we saw this happening in Yes Bank.
Yes.
We saw happening this in Samman Capital. Now it is RBL Bank. So the appetite of foreign investors or strategic investors to invest in Indian financials is there. Now, whoever wants to sell can sell, in my view. If it is a well-run bank with a good deposit franchise and good underwriting practices, it can be sold. And it can be sold at a good, decent price also and premium to the market price. Because we all know that RBL Bank a few months ago was trading at 200 rupees, right? And now we are close to 300.
Do you think IDBI Bank could be a beneficiary of something like this? I mean, what happens? There is a deal in the works there as well.
It is a large bank, so I would not say that it can happen at a significant premium. But of course, I think it is up for grabs because now PSU banks are also showing fantastic asset quality. So I would say that any bank, as I said, which has a good deposit franchise and a strong underwriting practices is up for grabs.
Earlier in the show, we had Dipan who said that PSU banks are, outperforming when it comes to fundamentals. And now the large banks, which were earlier, given a premium, the likes of ICICI, HDFC Bank, Axis Bank, all of them, their performance has become more PSU-like in the kind of growth that they are reporting. I mean, what do you make of Axis Bank's numbers?
I would say that PSU Bank's performance have definitely improved. Their asset quality has become very good. But I would not agree with the statement that private sector banks have worsened. In fact, I would like to give an opposite view over here. I would say that private sector banks are thumping the table buys today. Even if Axis Bank falls because of this 1,230 crore one-off standard asset provision, it is a priority sector lending related declassification thing. It is not an asset quality divergence at all. So hopefully it will be a one-off. And just look at it, credit card and personal loan, both unsecured segments. The asset quality is stabilizing. So now Axis Bank can grow that also. All banks for that matter, Axis, ICICI, SBI, HDFC, all. And so the margins will have that kind of cushion. Thanks to RBI, there's a lot of liquidity in the banking system, which will give them cushion to grow advances ahead of deposits, which we have seen in this quarter, which will give them operating leverage, which will give them cushion to margins. So Axis Bank, for example, full credit to them that their NIM compression was only 7 bips QOQ to 3.73%. Plus the loan book growth was around 12%, deposit growth was around 11%. So operationally a very good quarter. It was just about this 1,230 crore which came as a shocker, but it is okay. It is one-off. I think one should avoid it. One should see it through that it is a 1.7% ROA bank growing at 14-15%, available at 1.5 times book and 10 PE. And so that makes an attractive investment case for Axis Bank. And I would say, in fact, that this Axis Bank result will extrapolate into rallying private sector banks like ICICI Bank, also in PSU banks like SBI, as the growth rate expected by the market is being beaten. And the margin compression also, these banks are actually outperforming versus the expectations which were very low. So, for example, Axis Bank NIM compression was expected to be above 15 bips. It has come to 7 bips only. The loan book growth expectation was 3%. It has come to 5% QOQ and YOY 12%. So I would say that, in fact, the case is building up for re-rating of banks.
And in pre-open, the market is clearly latching on to what you had to say. You're saying the read-through actually is positive And Axis Bank, at least the initial rates that we're getting in, it's not a red. In fact, it's a mild positive tick. So the street is willing to look past that one-off and looking at the positives as well. So let's see where it settles at. But for the time being, a bit of a positive take. Parag, you're sounding optimistic on banks. In the past, we spoke about ICICI Bank, HDFC Bank, RBL Bank, and now SBI as well. So give us the top three in preference-wise. Because RBL Bank, I think you're in very, very early. So do you think most of the good news is in the price now? What target price would you look at? And yeah, give us the preference. Go ahead.
So preference, see, my portfolio reflects it. It is ICICI, HDFC, SBI. This is the preference. Of course, Axis Bank, if there is, in fact, I was expecting that some people might get frustrated and will sell, and that will be an opportunity to add. But let's see what happens. But I would say that City Union Bank is one another bank which we have in the portfolio, and RBL, of course. So I would say that this is the preference, and RBL has rallied going into the event. So I would wait for a while, let it consolidate, let the new management, the new investor come in. Let's see what they do. Let's see what their plans are, and then have a relook and then buy.
All right. What about other sectors? Is there anything particular that you like in other sectors?
So basically, my view is that, see, today Infosys and Wipro are going to report numbers. Let's see their numbers and let's see their commentary. IT is one sector from long-term perspective. It's a good contra buy in my view. And at the same time, FMCG is also a good contra buy in my view. The prices have corrected significantly. And of course, the interest rates, one thing is given now that rates are going to get cut, right? So the rate sensitives like NBFCs and real estate, we did well yesterday. In fact, we have DLF and Overall Realty in our portfolio, good weights. And NBFCs, we have Piramal, we have Geofinance in our portfolio. So I would expect that all these things to do well. So I think overall the market looks very good in my view, because I think the Fed has also said that they are going to stop quantitative tightening, which augurs well for emerging markets equity also.
Interesting. So in that case, I think you'll definitely keep your eye out on all the results that come in today. Two big ones from the FMCG consumption pack and two from the IT pack, like you spoke about as well.